The Reserve Bank lifts interest rates for the 10th successive time, but there's a glimmer of hope the rate cycle might soon end. Prime Minister Anthony Albanese says he'd like to visit China ahead of this week's delegation, which he's leading to India. And Atlassian joins the throng of tech companies cutting staff, saying 500 jobs will go. It's Wednesday, the 8th of March, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Cracking show today. Plenty going on yesterday.
Yeah, massive day, wasn't it? And I'll tell you what, we've got a really good guest today for the Fear and Greed daily interview. You're speaking with Anu Muralidharan from Expensify, which is a really interesting company with quite a remarkable backstory.
Yes. Now, firstly, I'd like to say every day we have remarkable guests on Fear and Greed, and Anu is just another to add to the list.
That feels like you're trying to stitch me up there a little bit, Sean, by me suggesting that none of our other guests have been quite as remarkable as this one.
No. Anu matches many of the other remarkable guests we've had. So Expensify does exactly what the name suggests, everything to do with expense management. But it's a very purpose-driven company. And in fact, its origins go back to a guy called David Barrett, trying to help the homeless in California, and how it morphed into what it is today, which is one of the leading expense management companies in the world. It's just a really fascinating chat with Anu.
Yeah, it sure is. It's coming up a little bit later on, but the main story this morning, Sean, as you mentioned, big day yesterday with the Reserve Bank signalling at least one more rate rise after shifting the official cash rate for the 10th time in succession. But it sounded just a touch less worried about inflation.
Just a touch, Michael, just a touch. The central bank has now pushed the official cash rate to 3.6%, up another 25 basis points yesterday, its highest level since May 2012. Governor Philip Lowe said that further tightening of monetary policy will be needed to undercut inflation, which is running at decade highs. But economists said the bank has left the door open for only one more increase. The money sentence from the Reserve Bank pretty much always comes in the last paragraph of the statement. Yesterday's says the board expects that further tightening of monetary policy will be needed to ensure that inflation returns to target and that this period of high inflation is only temporary. Last time around, they talked about further increases in interest rates. Note the plural in that sentence. That wasn't there this time. Hence, many economists now think there's only one more rate rise in the offing. Phil Lowe, the governor, made it clear that what happens from here will depend on developments in the global economy, household spending, and the all-important outlook for inflation and the labour market.
Interesting, Sean, that they have that the money sentence, as you put it, in the last paragraph of the statement. As a newspaper man of many years, wouldn't you just love to get your hands on the statement before it's published and say, hey, you lot, you're burying the lead. Let's open with this.
They bury the lead. There is no doubt about it. And they have for as long as I've been following the Reserve Bank. The last paragraph was always the place to go to. But you're right. Burying the lead, that should be the first paragraph.
Absolutely. And now, Sean, the bottom line here, though, is that home loan rates are rising again.
Yes, that is the bottom line. The latest increase means a household with a $750,000 mortgage will pay nearly $1,500 more in monthly repayments than a year ago. For a homeowner with $1 million loan, their monthly repayments have increased by close to $2,000 since last May, according to Rate City. Mind you, there's plenty of competition in the home lending market at the moment. We've spoken about that in the last few days. So if you're coming off a fixed rate loan or looking for a mortgage, shop around because there are certainly good deals out there, or at least better deals out there.
So what are financial markets saying about the future rate rises?
Well, bond investors still expect one or two rate rises. One local commentator expecting several more rate hikes is former Federal Treasurer and Chair of the Future Fund, Peter Costello. He said the Reserve Bank is lagging other central banks when it comes to tackling inflation, and Martin Place has a long way to go to catch up. But there are many high-profile market economists out there who think that maybe there's only one more in the offing.
How did local markets respond?
The local bourse liked the commentary from the central bank, even if it didn't like the increase in interest rates. The S&P ASX 200 finished the day up 0.5% to 7,365 points, with the big jump occurring immediately after the 2:30 p.m. announcement yesterday. Energy and consumer discretionary stocks did best, while materials underperformed. Among the large caps, all the banks were higher, with ANZ, Macquarie Group and Westpac rising more than 1%. The big miners were mixed. Fortescue was higher, while BHP and Rio were lower. Wesfarmers, Woolies, Santos, QBE, Insurance and Woodside all rose more than 1%. Now, Rio's fall came after it said it had been fined $15 million by the SEC, that's the corporate regulator in the US, the Securities Exchange Commission. It's been fined $15 million relating to an alleged bribery scheme. Megaport sank 15% after announcing that its longtime chief executive, Vincent English, had tendered his resignation from the role, effective immediately. And Canadian-based lithium explorer Sayona Mining was down 4% after raising $55 million to fund exploration in Quebec.
All right. And what about international markets? What's going on?
The Aussie dollar fell after the rates announcement and is trading around 67 US cents. In the short-term exchange rates, Michael, tend to move on interest rate expectations. So the drop in the Aussie suggests that foreign exchange traders have somewhat downgraded rate rise expectations. Not a lot going on in commodity markets. Oil and gold prices are largely unchanged. Coal prices continue to fall, and iron ore prices have also come off a bit.
Okay. We'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese says he will travel to China if invited by Xi Jinping, emphasising the need for a stable, secure region.
But he was quick to add that he'll always protect the national interest if there are disagreements with Beijing. The Prime Minister is leading a business delegation to India this week, and he really hopes that the visit will boost trade between the two countries. India, of course, has a massive population and enormous growth potential, something that Australia can take advantage of. Now, Albanese met with the Chinese Premier on the sidelines of the G20 summit in Beijing and Bali in November. He said yesterday that it's in our interests to export to China and it's in their interests to export from Australia. Remember, China imposed sanctions on $20 billion worth of Australian imports in 2020, but last month it resumed coal imports. There's also plenty of speculation around the place that it's looking to relax restrictions on cotton, beef, seafood and timber. Let's hope so.
Sean, homegrown software giant Atlassian will sack 5% of its workforce, or 500 full-time staff, as it works to improve earnings.
Yes. Now, a general announcement went out to staff, and then within 15 minutes, affected individuals in the talent acquisition, program management and research divisions received an email.
Oh, that's quick, isn't it?
It's very quick. The two founders, Mike Cannon-Brooks and Scott Farquhar, said they are reorganising the company to better reflect operating in a changing and difficult macroeconomic environment. They said it wasn't a financially driven reduction, and there are still 700 open roles in the companies. Now, it continues a trend among large tech companies, most of which have been financially driven. In recent months, there's been large redundancy rounds at Twitter. Remember, Elon Musk came in and took out half the staff. Meta and Amazon. There are reports this morning, in fact, that Meta, which of course owns Facebook and Instagram, is set to announce thousands more layoffs in coming days. Businesses within the tech sector, as they mature, are finding that their business models kind of need to morph into more traditional models. And so costs and unit costs and things like that are suddenly more important than they've ever been before.
Can you just explain that one for me in terms of the not being a financially driven reduction? Does that just mean that essentially they're kind of downsizing departments that they're not going to be focusing on moving forward, that kind of thing, as opposed to actually needing to do it to save money?
Yeah, so that's basically what they're saying, is that their strategy is for A, B, C, but we've got lots of people in C, D, E, so we don't need D and E. But we do need people in A and B. It's that kind of idea, though. You have to be a very strong company to be able just to do that, to put 500 people off and say that you've got 700 openings and, off you go. Anyway, we'll see what happens.
Yeah, okay. No, that makes sense. Now, the boss of the Commonwealth Bank, Matt Comyn, says trading conditions for businesses across the country are very, very strong.
Comyn was speaking at the Financial Review Business Summit yesterday, and he told the story of a major hospitality group repaying back tens of millions of dollars ahead of schedule because things were so good. He also expects banks to come under growing political pressure to pass on rate rises to deposit accounts amid an ACCC inquiry into how savers are treated. Now, Common also said the bank has reduced its fossil fuel exposure by 60% over the past 5 years. I didn't realise that. That's quite a reduction.
Sure is. Now, the relatively new US ambassador to Australia, Caroline Kennedy, says the AUKUS agreement represents the tip of the iceberg for partnerships between the two countries.
Yes, Kennedy was also speaking at the Financial Review conference. She hopes AUKUS will be one among many partnerships across artificial intelligence, quantum and renewables. Governments making available these opportunities via AUKUS will change a number of industries in a significant way and accelerate the development of new technology, she says. Kennedy also said the US Inflation Reduction Act, which directs money towards cleaner energy production, provides significant opportunities for Australia.
There was a whole lot of CEOs at the business summit as well, Sean. It was a very high-profile event.
Yes, it sure was. Fortescue's Andrew Forrest was there touting the importance of green energy for India. He said India was still heavily dependent on Russian-exported fossil fuels, but the Indian market was promising due to rising demand for green energy. He also said that governments that shun China, including the Morrison government in Australia, were working against the national interest. Macquarie Group's Shamara Wickramanayaka, dismissed as speculation, reports that Macquarie is planning an $8.9 billion takeover bid of UK-listed fund manager and insurer M&G. She said there's so many speculated transactions that Macquarie waits until they're done before talking about them. And Woolworths boss Brad Banducci said food inflation is coming down, but much more slowly than anyone had expected. Some items, such as vegetables, are falling in price, while there's an easing of inflation on red meat, but Michael, poultry prices are on the rise.
Sean, you mentioned a minute ago the US Inflation Reduction Act. Now, it is a big deal. It will reward global companies for investing in clean technology in the US, something that BHP has been thinking about.
Yes, and yesterday BHP CEO Mike Henry made it clear that any tax reform in Australia must not disincentivise capital from coming into the country. The argument being that the Inflation Reduction Act is providing such huge incentives for global companies like BHP in the US that Australia not necessarily has to compete, but certainly doesn't want to go the other way. Henry said Australia already has corporate and personal tax rates at the very upper end of OECD countries, and while reform is hard, it's important to do so if the government wants to serve the national interest. Henry also said that recent changes to economic policy in China is a positive step for commodities demand and global growth. Now, of course, earlier this week, Beijing nominated a 5% target for growth this year.
Interest rates, Sean, weren't the only economic news around yesterday, and I feel a little bit sorry for Australia's trade surplus. Imagine having your big day overshadowed by the Reserve Bank's interest rate announcement. But anyway, the surplus fell to $11.7 billion in January.
Yeah, so that's the excess of exports over imports, and in December it was $13 billion. While there were more iron ore exports in January, which is a positive for the surplus, there was also a bunch more imports of consumer and capital goods, stuff like, new TVs, clothes, equipment, that type of stuff. Hence, a lower surplus.
Now, Sean, one last one before we get to international news. I know one of your favourite companies on the ASX, one of the ones that you love talking about, and it's a little bit kind of Wednesday Addams-ish, really, the fact that you're obsessed with this company, is InvoCare, which is the funeral operator with brands like White Lady Funerals and Simplicity Funerals. Private equity group TPG has bought an 18% stake.
I do love this story, and when I saw this yesterday, I was quite excited because the purchase, when it was announced, it sent InvoCare's share price up 35% yesterday to $12.05, easily the best performer of the top 200. Now, the shares were bought by a TPG-owned vehicle called, Michael, Blue Eternal.
Oh, that sounds very appropriate, really.
It does sound appropriate. I feel like we should be talking in hushed tones here.
Yes, we should.
So Blue Eternal has bought 18% of InvoCare.
See, when you do it, Sean, it just sounds creepy, which
you're right.
I suppose is actually kind of appropriate for the Wednesday Addams theme. Please go on.
Maybe. Anyway, Blue Eternal and other TPG-owned vehicles now own its 17.8% to be exact. InvoCare later yesterday announced that it had received an indicative buyout offer of $12.65 a share, which is a 40% premium to Monday's closing price. So remember, yesterday it ended at $12.05. It said it's had a $12.65 a share offer. The board's assessing that offer. Undoubtedly, there's some opportunities in this. InvoCare's share price was sitting around $11.30 for a few months until its earnings announcement a little over a week ago, whereby it tumbled to less than $9 a share. And this offers $12.65. So it looks very good. But if you actually take out the last week or two of trading, it isn't that big a premium.
Have you seen Wednesday, the TV show on Netflix, Sean?
No, but my kids have, and people say it's fantastic.
Yeah, I suspect you may be the last person on the planet to watch it.
Right. Well, that's assuming I watch it.
Well, you should. It's good.
I've been busy reading a book.
Oh, fair call. You flatter me. In international news, Sean, South American nations are stepping up efforts to become players in the electric vehicle supply chain by leveraging their vast mineral wealth and in turn actually becoming serious challenges to nations like Australia.
Argentina, Chile, Bolivia and Brazil plan to coordinate action on turning more of the region's mined lithium into battery chemicals, as well as moving into manufacturing of batteries and electric vehicles, according to Argentinian officials. The drive across the key producing regions of South America reflects a growing global trend by resource-rich nations to shift away from only supplying raw materials, but also developing higher value activities. It's happening closer to home too, Michael. Indonesia, for example, has laid out an ambition to become a global battery hub for electric vehicles as demand for greener transport skyrockets.
Speaking of skyrockets, Sean, it was supposed to be a seminal day yesterday for Japan's Aerospace Exploration Agency with the launch of its next generation rocket, but it was aborted via a self-destruct command moments after liftoff.
Somewhat disappointing.
Seems a slight understatement there, Sean.
The program's hoping to take on Elon Musk's SpaceX program, but yesterday during its first launch, the second stage engine failed to ignite. As a result, self-destruct command was given, and that's what it did. It self-destructed. The 63-metre tall rocket was developed by Mitsubishi Heavy Industries. It's the country's latest attempt to capitalise on growing demand in the global space industry. It's something Japan has taken very seriously recently. This launch has been worked on for about a decade. Now, the rocket previously failed to launch on February 17 after a system malfunction, whatever that is. Anyway, it got off the ground yesterday, but only briefly.
Doesn't seem like much is working with it, except for the self-destruct button.
That worked a treat.
Yes, certainly did. Finally, Sean, Wall Street famously pays big bucks, and one of the street's best-known traders has decided to take a break, foregoing his $100 million plus salary.
Yes, his name is Joe Montesano, and he works at Goldman Sachs, which is the number one ranked Wall Street firm for equities trading. The 46-year-old has resigned, according to a report by Bloomberg, and is leaving to take a break, and he hasn't really got a job to go to, poor fella. Now, his pay in recent years is estimated to have been around $75 million annually. That's about $110 million Aussie. Clearly, he's had a very good run. But imagine that, just deciding to resign at 46 and go and enjoy life. Fair enough.
So it's a dream that we all share, really, Sean. I mean, obviously you can't retire at 46 because you're past that, but there's still hope for some of us who are approaching that age.
Do you think you'll do it?
No. Absolutely no chance. Thank you for bringing me back down to your level. Up next, Sean, is the Fear and Greed Daily interview with Anu Muralidharan from Expensify.
Yes, all about expense management, but even Anu agrees that expense management doesn't always seem to be the sexiest topic out there. But the Expensify story is very interesting.
Yeah, it sure is. And the company will be appearing at the Accounting Business Expo on the 14th and 15th of March in Melbourne next week, which is a supporter of this podcast. The interview is definitely worth a listen. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 8th of March, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook. And don't forget to check out the newer episode today of How Do They Afford That, which is our podcast about making your money work a little bit harder for you. Today's episode is all about set and forget investing. It's a really good topic. I'm Michael Thompson, and that was Fear and Greed. Have a great day.